And today we're going to be talking about Donald Trump's secret strategy to how he avoids paying tax. What's up, family? Welcome back to another episode of Tax-Free Living, where I'm going to be teaching entrepreneurs just like you how to live tax-free. Okay, the secret's out now. You're going to be able to learn how he does it and how you could potentially do it for you. But before we get into today's episode, again, guys, hit that like button, hit that subscribe button, and follow the channel. Share it with a friend. We're here 3 days a week, okay? I have my show teaching you all how to live tax-free. Then we do our podcast on Wednesday, giving you phenomenal game about entrepreneurship, business, money, investing. And then George, my partner, does his Financial Freedom Fastlane shows on Friday. So 3 days a week, you getting this sauce on not just how to make the bag, but how to keep the bag as well. So, as we know, our former president, Donald Trump, does not like to pay taxes. And not just he doesn't like to pay taxes, he is adamant about not paying taxes. And I ain't mad at him. So in the recent story, Donald Trump paid, when his tax return was released during his presidency, it came to the lights that he paid no taxes in 2020, and in the years 2016 and 2017 combined, he paid $750 in taxes on a whopping $622 million. Can y'all imagine making $622 million and your tax bill is $750? Well, that's what Donald Trump did. And here's the crazy part. A lot of people got upset. A lot of people say he's a scammer. This isn't right. He should go to jail. It's fraudulent. And then a lot of other people, they didn't blame Donald Trump. They blamed all millionaires in general. They say the tax code is only made to help millionaires win and it's not fair. And so some people decide to hate the player, right? And I get it. It sucks. But other people decide to hate the game. Right? The tax system is not made to benefit us. I would encourage you, don't hate the player. Also, don't hate the game. Just learn the game so that you can win the game. Okay? Learn the game so that you can win the game. And I'll be the first to tell y'all, the tax code doesn't care if you're white, black, Hispanic, green, yellow, or purple. The rules are clear and everybody has the ability to use them. Okay? So I need you all to understand, instead of getting upset, just learn the game so that you can win the game. So today, I'm gonna teach you Donald Trump's secret strategy on how he avoids paying taxes on millions and millions and millions of dollars. And then I'm also teach you how you can do it for yourself. All right, so what's the strategy, right? Well, it's a few things. So first of all, I need you all to understand that the tax code is not created to help employees, okay? I say this all the time. You all know this. The tax code is made to benefit entrepreneurs or investors, right? So Donald Trump is both. He's both an entrepreneur and he's an investor. And his main investment, as most of you all know, if you haven't been to Chicago or any other cities, that he has his name on all of his buildings, Donald Trump's investment of choice is real estate. Why is it real estate? Because real estate is the most tax advantage asset that you can ever invest in, okay? I'm gonna say it again for the people in the back, okay? Real estate is the most tax advantage asset of all asset classes. I don't care about stocks, I don't care about crypto, I don't care about Forex, whatever. Real estate is the number one tax advantage asset of all time. Why is that? It's because of this little thing called depreciation. And for those of you all that don't know what depreciation is your asset losing value over time, right? And the IRS says, because your asset is gonna lose value over time with wear and tear, we're gonna give you a tax deduction today for your asset losing value in the future. Say what? Don't threaten me with a good time. You mean that you're gonna give me a tax deduction today for my asset losing value in the future? That's crazy. And you wanna know the real crazy part? Is even if your asset appreciates, right? Not depreciate, even if your asset appreciates over time, the IRS will still give you a tax deduction as if your asset depreciated. So Carter, what you're telling me is if I buy a real estate property, if it goes up in value, the IRS will still give me a tax deduction as if it went down in value? Yes, that is the world we live in. So that is why real estate is the most tax advantaged asset of all time. So how does Donald Trump leverage real estate to avoid $600 million in taxes? Well, let's talk about it. So what Donald Trump does is he buys property, okay? So when Donald Trump purchases a property, when Donald Trump purchases a property, he gets cash flow from the property every single month. So he has tenants in the property, they pay him monthly and cover the mortgage plus some. So the tenants cover the mortgage and he makes cash flow on top of the money that he paid for the property. So let's do some math together. Y'all okay with doing some math today? It's gonna be easy math, trust me, okay? So let's say that Donald Trump bought a property for $500,000, right? And let's say that property brings him in $4,500 a month in rent, right? And let's say his mortgage and taxes and property taxes and all the fees for his property is only $3,000 a month. So he has to pay $3,000 a month, but he's making $4,500 a month, which means that his profit per month is $1,500, okay? So if you do 1,500 times 12, that means that this property that Donald Trump bought is gonna bring him in $18,000 a year in passive income, okay? Now, most of you all are probably thinking, well, okay, cool, Donald Trump has to pay taxes on that $18,000, right? Well, actually you're wrong. Because of depreciation, he's gonna get a deduction on top of all the actual fees that cost to run the property. And his depreciation deduction is calculated by taking the purchase price of the property, the $500,000, and dividing it by 27.5, because residential properties have a depreciable life of 27.5 years. So if we do 500,000 divided by 27.5, that gives us $18,181. That means he's gonna get a depreciation deduction every year for $18,181. Well, wait a second. If his profit was $18,000 and his depreciation is $18,000, that means that his depreciation completely wipes out his profit. So that means he's gonna be receiving $18,000 a year of tax-free cash flow money in his bank account, okay? See, we call this strategy earn in pocket and lose on paper. So he can actually make money in his bank account. That $18,000 is sitting in his bank account, but on his tax return is gonna show that he made no money because of the depreciation deduction. So he buys properties and does this over and over and over again. $100,000 of tax-free money, $200,000 of tax-free money, $1 million of tax-free money, right? He does this, he rinses and repeats. And then, so that's step number one, okay? Step number two is eventually there's gonna come a point in time where Donald Trump is gonna wanna sell one of these properties. Let's say he bought a property at $500,000 and let's say he sold it for $1 million, right? Now he has $500,000 in profit. And that $500,000 in profit is gonna get hit with capital gains tax of 20%. So he would have a $100,000 tax bill for selling this property. But Donald Trump, he's a wise man, or at least his accounting team has some wise men on the team because they understand this amazing strategy called 1031 like-kind exchanges. So what does 1031 like-kind exchange mean? The IRS says if you sell a property and you plan to buy another like kind property, you can defer the taxes on the sale. Okay? So if you sell a property, you have to find a new property within 45 days of the sale, and you have to close on the new property within 180 days of the sale. If you do these two things, the IRS will allow you to defer the taxes on the sale. So in our example, if he bought a property for $500,000 and sold it for $1 million, and if he took that $1 million that he made and bought another property for $1 million, right? He doesn't have to pay that $500,000 a capital gains tax gets deferred, right? And it gets deferred and it gets deferred. So he can go from $500,000 property to $1 million property to a $5 million property, a $5 million property to a $10 million property. He can keep buying and selling real estate and deferring the taxes. And so that's why he's able to make millions upon millions upon millions of dollars in real estate. He doesn't pay any taxes on the cash flow. And then when he sells it, he still doesn't pay taxes on the sale. Now, here's a bonus strategy. And we don't know if Donald Trump is doing this because, well, he hasn't died yet. So a bonus strategy on top of this is that once Donald Trump dies, all those deferred taxes go away, because when he dies and his kids inherit the property, they get what's called a step up in basis, meaning that the tax basis of the property will be the fair market value of the property when he dies. And knowing Donald Trump, what he's gonna do, he has hundreds, if not millions of dollars in life insurance policies that when he dies, the kids are going to receive all this life insurance. And in case you didn't know, life insurance proceeds is not taxable. So his kids are going to receive millions of dollars in life insurance proceeds with it tax-free, which they're going to use to pay off any debt left on the properties. So Donald Trump didn't pay any taxes on the cash flow. He didn't pay any taxes on the sale. His kids are not going to have to pay any taxes on the properties when they inherit them, and then they're gonna receive tax-free inheritance money, which they can use to pay off the debt in the properties and live tax-free and build generational wealth. Now, why did I bring this example up? Did I wanna highlight Donald Trump's tax strategies? Not necessarily. I want you to know that these strategies aren't reserved for the ultra wealthy people. You can take advantage of the strategy too. You can buy real estate. You can take advantage of depreciation. You can do 1031 like-kind exchanges. You can buy life insurance so that when you die, your kids get a step up in basis and to pay off the property. We are able to do this as well. We just have to get the information first to change our situations. And that was the goal of today's video. And now I hope that you go run the play with no delay. Okay, guys, I love y'all. See y'all on the next episode. Don't forget to like and subscribe if you like today's episode. Comment below if you're gonna do this, and I'll see y'all next time. Peace.